What's up guys, Brian here. Just want to do a quick video doing a little bit of training here late night. So I just want to talk about either cutting yourself off early or waiting until you're at a particular price point that you're shooting for in crypto. So one of the things that you have to realize is these large stacks that some of these companies own, whether they own, it could be Tesla, their buying was around $30,000 and they bought $1.5 billion worth. At the end of the day, I mean, you have sophisticated traders that are looking at this stuff. And so ultimately, if they think that, it's going to turn the other way, they could very easily dump it. And maybe Tesla's not even the one to necessarily be worried about. You look at someone like Block One, and they've got over 200,000 Bitcoins that they basically accumulated with investor money, from the ICO that lasted for a year. They raised over $4 billion, and now this, their values, beyond 10 to $12 billion. But if you look at the market cap of EOS, it is, around, like, let's say $4 billion. So that kind of makes you think in your head, what was their play? They were going to get the Ethereum. They're going to do what they had to do, build the EOS.io software. Obviously, they sold the Ethereum to do what they needed to do with that. Then they took the rest of it and stacked Bitcoins, did minimal, you could say, or played this long-term game for themselves, and ultimately ended up with this huge stack. And then they've rode this out, and now they've got this huge stack. So you have to understand that if you invested in the EOS ICO or got tokens around that time, which I did, then and you feel like that your investment really didn't play out that great. Maybe you didn't lose money, but maybe you just didn't gain as much as you would have if you would have just stacked Bitcoins or stacked Ethereum at the lower price points. Then you have to worry that they're going to turn around and they got you coming, and they're going to get you going because they're going to dump those Bitcoins. What do you think they're going to do? They didn't hold on to the Ethereum, at those high price points or wherever. They sold the Ethereum and, invested in development and stuff like that, but then also invested in Bitcoin primarily. And I've had some people say, oh, I don't think Block One's going to dump the Bitcoins. Why wouldn't they? Because at the end of the day, if you're just indefinitely holding on to coins or tokens, it may seem, great, when things are kind of going up and things are looking okay. But when it turns the other direction, it goes up like a rocket, comes down like a guillotine. You don't want to be holding on to that asset. Some people have asked, do I think that this is going to go into some sort of super cycle, or do I think that, it's just going to do sort of a global takeover? I don't think so at this point. In 2013, 2014, I felt like, well, it's going to go up and down then there's going to be one more kind of up and back down, and then after that, it would be like poised to do a global takeover. Well, the problem is Bitcoin and Ethereum have not scaled. So you don't really have, any kind of better network than it was, and obviously with Ethereum, you don't really have anything much better than what it was, a couple years ago, 3 years ago. As far as capacity is concerned, there was a little bit of improvement. I think the block times went down a little bit. I mean, we're talking like from 15 seconds to maybe like 13 or something like that, approximations. There was a few other little, improvements here or there, but it was really third-party development and kind of the gamification of the DeFi stuff that really spurred a lot of demand. It wasn't its ability to handle like more transaction capacity. And people keep talking about, different things on the horizon. And a lot of that stuff is months off. We could very well be past a blow off top. You have to understand that 1 year ago, Bitcoin was trading at 3,800 in the pandemic crash. So that's a 15x that we went. At some point, people take profits to buy cars, to buy houses, to buy land, all these kind of things. And more, I catch myself looking up cars. That is a sell indicator. And a lot of other people have been looking up cars and looking up land and this and that. So it is on people's mind, whereas 6 months ago it wasn't necessarily on your minds, because we thought, well, we're going to be looking at like fourth quarter of 2021 when this stuff is going to peak. We might not get there as far as this. Now, do we have sort of a double top like we did in 2013? I mean, potentially. There's a lot of weird factors. This has been a very, very weird situation, that the pricing obviously collapsed back down to 3,800, didn't go to like lows for the entire cycle, the entire bear market, because that was more around like 3,200, 3,300. But it did get low. 3,800 is low. And, and then to kind of go up from there, and then ultimately kind of regain its base, and then take off. And then obviously, like, as it gains momentum, you get more and more FOMO. Here's the issue. Typically in these cycles, it's been driven by retail, and then sort of like institutional investors have more kind of missed out more than anything. This time institutional kind of got in earlier, but you have to understand that the retail investor, when they look at a price point of $60,000 Bitcoins, when it gets to 65, 70,000, there's a point where they feel like, well, they missed it. They're going to go in other stuff. And so if you're looking for these, these cycle highs to be $150,000 or $200,000 for Bitcoin, there becomes a point where the sophisticated money isn't going to necessarily throw money at that. And that is not a palatable number for kind of your everyday person. And even with Ethereum, there's enough kind of gravitation away from that. They've done some surveys from like Voyager and other apps like that, where Cardano has been very popular for people. That kind of meets kind of a little bit of a trifecta, where it's like a quote unquote cheap price point, around $1. And then you have you have the carrot hanging out there that it's going to solve all types of problems. It's going to save the whales. It's going to cure cancer. It's going to do all this stuff. So, and people kind of chase that carrot. If you have an existing blockchain, you have to deal with the reality of congestion or spam on the network, or these kind of things that actually like are reality. With Cardano, we don't necessarily have to deal with the reality yet, because it's been going on for 4 years and it's not capable of smart contracts yet, which is pretty ridiculous. I have not sold my Cardano yet. I've kind of broke my own rules on it, just because I just saw kind of the amount of just kind of the amount of like interest and stuff in it, and just the amount that I kind of see it popping up on social media and that kind of thing. So I think in this last run, when these stimulus checks hit, this kind of last run, and then I'm going to shave off. But of course, like, I'm always going to keep moon bags, and whether that's like 50% of my holdings, and then ultimately as things run up, it could end up being 20%. I will always leave the top 20% of my holdings in crypto. And when I say like in crypto, I'm saying like in the actual assets. Like, I'm going to still have a lot more of the money in crypto, but it's going to be dollar pegged assets, USDC, DAI. I mean, USDC is it's harder not to go wrong with that. Now, if you're on the Ethereum network, you're using that on Ethereum, you're talking about a different situation, but it's tokenized on the Binance Smart Chain. So if I'm on these things like Cub Finance, I'm on stuff like Pancake Swap, all those kind of things, I can earn a decent return off of USDC. And, it's, for the most part, you're not going to have an issue with it staying pegged to the US dollar, because, Coinbase is behind it, and there's a lot of money backing it. So I don't see it getting ripped away from the peg, or there being as many issues that we might run into with Tether potentially. So that's just one thing to remember. Now, what is happening to a lot of people, and I saw this in like previous bull markets and stuff. You start chasing, like, whether it be some sort of clone of something or some sort of new thing coming out, everybody's like searching for that next diamond in the rough, what has the next hype. So you're like riding these hype cycles. We've been riding hype cycles for a while now. We've just been like jumping on these rockets, shooting up, and then leaving kind of a moon bag left. I mean, I did that with Zilliqa, I did that with Polkadot, I've done that with like a bunch of different coins. To some point, it kind of flame out. So it's really, really hard to like know how much has the world economy been hurt, how much has the US economy been hurt, how much is, I think it's $800 billion that's going directly to people of the US, with the $1,400 stimulus. That's a lot of money. And even if 10% of it comes in, then you're going to figure, people are going to leverage out, other people are going to FOMO, people are going to borrow more money, all this kind of stuff. So some people are even saying that it could be a factor of 20 beyond what ends up going in. So if it ends up being 80 billion, they're saying it's a factor of 20 beyond that. But who knows? That is really hard to say. Some people say that I'm cutting myself off too early. Now, would I say that I'm cutting myself off too early? I would say like, well, I was in more kind of ground floor. Some of the price points obviously that I got, 3 cents on Cardano. I bought some Ethereum for $85 back in the lows in 2018. So I bought some Litecoins for like $25. So to understand, like, I've been kind of riding that for a while, and so I'm not as concerned about, let's say, hitting the peak. At some point you do have to take profits. Now here's another thing that I'm noticing: a lot of YouTubers talking about kind of their exit strategies. BitBoy Crypto is even trying to give like an exact date, September 28th. It's kind of interesting, he's doing that, but there's enough people watching that. And then it's like, well, okay, then people think, well, I'm going to get out before that. I'm going to get out in August. Or they think like way before that. Well, the fact of the matter is, it just takes some major players to be like, hey, we hit our goals, we 3x this, we 4x this investment, we had billions invested, let's get out. And very quickly, people get shook very bad. So my main thing is like, as people are kind of buying into this and it's surging upward and stuff, and people are getting super excited and FOMOing all over the place, and there's more and more projects popping out, I'm seeing tons and tons of NFT platforms popping out. I'm seeing these pop out every day. I'm seeing a lot of skin jobs and kind of clones of PancakeSwap. Some have merit, some don't, and then kind of the returns sort of dry up, and then you're sort of left with thinking, well, did you chase the next one and the next one and the next one? It's a diminishing return thing, just like the Bitcoin forks were back in the last cycle. You had Bitcoin Cash, and it was like, okay, well, it's going to kind of stay around. You had like Bitcoin Gold and Bitcoin Diamonds, and you had like various other ones, and then people were trying to do forks of Monero. Pretty much none of those seemed to survive. There was Litecoin Cash. There's all these forks. Like, people just started jumping on the fork game. Previous cycle before that, it was the clone game. It was all these Litecoin clones. The only one that really survived was Doge. So again, there might be like one or two of these things that sort of survive, kind of make it through, do something unique, or there's a certain aspect of it that survives. But realize, as you see like more and more of these projects going out, it's going to dilute the market. You look at something like CoinMarketCap or CoinGecko, you're talking like well beyond 6,000 projects listed. There are so many facets and so many different ways to make money in crypto right now that you could like literally be in your own little ecosystem and be oblivious to like 20, 30, 50 other things. But again, there's always this feeling you're missing out. I felt like I've sort of like missed out on the NFT thing. Very hard one to play because it's that whole market just is completely whack. We don't really know what's going on with it. You can speculate all day on why this stuff's going for so much, or what's kind of going on, or if it's really like real actual transactions or not. But really hard to say. So anyway, guys, with that, I just want to pretty much, because some people are going to think that I'm exiting early, and I get that. When I think about, if I doubled my portfolio from here, I would survive. I mean, I could thug it out like all day long, all year long. But I could thug it out for 4 or 5 years. You guys know me, but really when it boils down to it, would I be happy with that kind of like number per se? No, like I really wouldn't be. But at the end of the day, that's kind of like what I'm seeing. So I'm not trying to project a certain price or certain portfolio value. That's where it's going to end up. That's where the chips landed. Could have maybe done some stuff different, you know, during the bear market or kind of leading up to the bull market. But, you know, we are where we're at right now. I think we got one last major kind of surge. You're going to see like insane price action in the alts. You're going to catch some good rides. Don't get too greedy. That's one of the, and you have to kind of anticipate that there is not going to be a double peak, that we're not going to have the price appreciation in December, or that we're not going to, you know, that like, you know, that Ethereum is not going to get to whatever price point somebody said, 5,000 or 10,000, or, you know, you have to assume, working off of what you're working off of, I have to even assume that even my price prediction, okay, and the lights are out, that my price prediction of, you know, basically of $4,000 Ethereum may not come true. So, you know, it is just what it is. But I think that it still will hit that. This last leg will be aggressive. There'll be a lot of hype, a lot of excitement, and a lot of money coming in. So anyway, guys, I would say just like, you know, don't get greedy. You got to start feathering out. My main thing again is to feather into stable coins and still make money off of it, and kind of just like understand a lot of these ecosystems and the dynamic behind, you know, Steam and the Steam backed dollar, and Hive and the Hive backed dollar, and Leo and Cub Finance, and all these kind of things, and kind of you understand enough like platforms that you can kind of adjust to what's happening and keep earning, keep stacking, but take profits. You're not going to be happy unless you have a sick ride, or you buy some properties, you buy a new house, you do that. You know what I'm saying? So like, set yourself up kind of first and foremost. Don't fall in love with these coins, kind of thing. So anyway, guys, that's the video today. Please subscribe, turn on notifications, follow me on all social media at Brian Phobos, YouTube, Instagram, Steam, Twitter, Hive, MySpace, Friendster, Library, DTube. See ya.